Now, joining us is Harry Rady, CEO and Portfolio Manager at Rady Asset Management, and Alan Lancz, founder of Alan B. Lancz and Associates, also the editor of the Lancz letter. To both of you, thank you for your time. Alan, I am wondering what scenario in Europe is already priced into the U.S. markets?
Well, I think you're starting to see that, Mandy. You know, the market was up 17–18% since the August lows, and I think rationality is coming into the market where they're starting to acknowledge the problems in Europe. It's a global deleveraging process that's going to take years to unwind. So I think you're going to have this back and forth type market, and now, you know, it's heading back a little bit from the excesses, you know, from the rebound in late August when everybody was talking double dip. So double dips off the table. Now we got the negative or the ceiling from the European sovereign debt problems.
Yeah, Harry, Alan makes a great point in that the markets are still obviously susceptible to the headline risk that exists in the markets now. So if you have, let's say, various markets within Europe tailing down towards the end of the year, what's that going to mean for our markets now, which many people thought were going to go up towards the end of the year? Is Europe going to drag us down?
Yeah, I think that the U.S. markets have gone up too much and that investors are complacent. You know, I think that the pigs, you know, Portugal, Ireland, Greece, and Spain, are ultimately going to default. And maybe not all of them, but we think defaults are on the horizon, and it's just not adequately discounted. I'm not sure most investors understand that the EU is the second largest market for U.S. exporters. So these problems are very significant for us.
You're speaking obviously, Harry, to what's going to happen potentially with the dollar. I mean, if the dollar goes into some sort of long-term strengthening trend, obviously the euro's been weakened by what's happened in Europe. The dollar's becoming stronger, thus commodity stocks and other stocks that are in our markets are certainly being affected by that.
Yes, but, you know, with the market up as much as it has been over the last couple of months, we just think that it's ignoring the underlying fundamentals and perhaps paying too much attention to the Bernanke put and QE2. So, you know, we're focusing on, you know, some really well-run, less cyclical type companies, you know, like in the pharma space. We own Warner Chilcott. Warner Chilcott's trading at 6 times earnings. We own Cobalt Energy, you know, which we believe is trading at 50% of its underlying NAV. We own Fleur Systems, which basically allows the U.S. military to say that we own the night. That's Fleur Systems technology. So we want to own these really high-quality companies that will be relatively immune to the problems.
I mean, this is what you want. You want immunity, essentially. How are you getting immunity, Alan? What would you advocate?
Well, I think it's time to get into the low expectation, more defensive names, Mandy. 2 years ago, on the day after Thanksgiving, we listed 9 companies, and they're up 76% as far as from our recommendation. And they were, you know, more of the risk, no dividend. The Apple computers, Goldman Sachs at that time trading under book value. It was a great time to buy. Now, you know, the bargains are harder to find. The markets rallied tremendously from 2008, Black Friday, and I think it's a situation now where the only similar name from that list of 9 would be Microsoft, which is only up 20%. But you get a good dividend. Adobe is down trading near its lows, and then just like the other gentleman, I think healthcare, good defensive position. You can do Pfizer, Merck, Teva. We were buying Teva in the 30s. Now you can get it under 50 again. We put Teva back on our list with a good dividend stream and more defensive names, even like an Exelon as far as over 5.5% dividend for a utility. Those are the areas we're looking at, Mandy.
Alan and Harry, thank you very much for your ideas. Now, when we come back, it is Black Friday. We're going to have some live reports from the East and the West Coast.
Got everything covered, of course, and we'll discuss just how strong this shopping season will be and what it means for investing in the sector. We're back in 2 minutes. Stay with us.